Hello, everyone. Welcome to Cash Rules. My name is Nick Foley. I'm here with the one, the only, the man, the myth, the legend. I always say that because I know it makes him blush. Nick Gilmour. How you doing, Nick?
Good, man. Yourself?
Welcome to Cash Rules, my friends. I'm pretty good. I'm doing well. I'm excited about today's episode, and the reason being is because we put it out to our listeners this last week as to what they would like to hear, and we got a lot of some really great questions, some about personal credit, and I'm looking forward to doing a deep dive. We got some stuff on business credit as well, but I'm really looking forward to doing a deep dive with all these. So for the sake of time and for the sake of your time and our listeners, I want to kind of get right into it. Are you ready to rock on these, my man?
Let's do it.
I think we got about 10 questions to go. So what I'm going to do, or to do today, so what I think I'm going to do is I'm going to read these right verbatim as they were presented to us. I'll leave the names out, obviously, because we'll keep it as private as we can. But some people just put it right on our social media channels, which is totally fine. Some people did some DMs and stuff. So I'm going to leave it all out. I'm not going to say who said it, but these are all great questions that I think are worthy. And we got to every question that we saw. So if your question didn't get answered, hit us up again, and we'll make sure that we circle back for next week. That sound about fair, Nick?
Yeah, absolutely.
All right, here we go. So the first question is, this is more of a business question. And I got to say, before we get into this, I'm really excited about today's episode because I'm here for the learning, as you know. I mean, you and I have talked, at length about the importance of always learning. So I'm looking forward to, asking these questions and taking notes like our listeners today. So I know we're putting you on the spot, Nick. You've seen these questions quickly and briefly, but you haven't really had a chance to do a deep dive in any, and some of them you haven't seen actually. That I just got off the later after we decided on the ones we're gonna talk about. So this, my friends, the reason why I'm saying this to everybody is because it's you're gonna see Nick in his element here, and I really mean that because he's gonna be on the spot, giving us not necessarily from the hip answers, but he'll be authentically approaching this as to the first thing that comes to his mind type thing, and I think that's gonna make the episode that much more fun. So let's get into it.
Beauty.
First question: when new companies are applying for credit, what's the best way to show the bank you should be lent money?
Okay, good, awesome question. Anybody who's getting into business always obviously comes up against this unless you were given money or you were able to borrow from parents or family. But these answers that I'm going to give today are relative to my life, my experiences, and everything that I've been through. So I'm not saying it's not black and white sometimes, but I'm going to answer these to the best of my ability. So borrowing the money from a lender when you're a new business. So obviously you haven't established any credit. You haven't really established any relationship between your bank and yourself as a business. So there's a couple of awesome organizations, and they are government organizations. One of them I can speak on is the CFDC. So the Community Futures Development Corporation. This is one that's kind of in our area in Kingston, northern Kingston. And basically their mandate is to help, and I'm obviously, it's more than this, but it's to help small business, to help small local business. So they have loan programs, they have grant programs, they have counseling services, anything that a new business or a new entrepreneur might need to help them get started. These guys are like a one-stop shop, and it's not just located there. They're all over the place. So they're in different towns or in different cities, different organizations that are government funded. And these are a great place to go. The other way, and I mean, I've done this too, is sometimes you got to tap into your personal credit. There's no way around it. And I'm not, it depends how crazy you want to get and how much money you need. Obviously, I'm a huge advocate for bootstrapping. So my saying, grassroots approach, means not only coming from nothing, but bootstrapping in your business at every step so that you don't have a huge capital injection in order to fund the next level of business. So sometimes, if you need to get to that next level, or if it's at the start, then you really need to tap into your credit and use some credit cards, use your personal credit cards, use a personal line of credit, a HELOC, home equity line of credit, and you got to do what you got to do to get it started. And unfortunately, if you don't have super great personal credit, because you're going to have to personally guarantee the loan anyways when it's a business loan, unless you're a fucking ginormous company, you're going to have to personally guarantee it anyway. So you're not protected whether you use your personal credit or not. So to get started in the first couple of years, government organizations are huge. Try to look out for any grants, in your areas and loans. They're a little higher interest, but they're easier to apply for and easier to get. And then of course you can use your personal credit to fund your business and get it going, and then obviously pay it back as time goes on.
So question with that, and I know our listeners probably have this question because I have the question. How do you personally guarantee something in a business loan?
So, for example, if we are, you and I are partners in something and we want to purchase a business. Let's say it's a meat shop. So you and I say, okay, yep, we want to go and we want to buy a meat shop. So we go to the bank and the bank says, we'll lend you 70% or 65% of the money. And we say, okay, no problem, because we've got 30%. So, there's our skin in the game, which I hate that fucking term, as you know.
Yeah, we'll talk about that in a sec. That's good.
They always look for that constantly. But when you apply for these loans, they'll approve it, okay, based on your business credentials. So if the business gets going and you're able to get a loan or get a line of credit for your business, they will ask you. So you're Nick Foley, Nick Gilmour. Yes, your business, we're going to lend you $100,000, get your meat shop, whatever, to expand your business, but you need to personally guarantee it. So if we default on the loan or the business goes tits up, they can come after us personally for all or a portion of that loan. So, that's another one too. By the way, just backstep BDC. BDC is an amazing corporation for startups and for growing business. Kind of the same mandate as the CFDC that I spoke about. But it's just another great resource, and I have a really good contact there, at least at the Kingston location, and would be happy to make that introduction. But BDC, CFDC, personal credit cards, and get ready to personally guarantee everything you do from now till the foreseeable future. So there's no way out. It's success, burn the boats. Success or you die.
I love that. Nick, it was interesting to me that you said that you're always going to be on the hook, or you have the skin in the game. And you and I both hate that expression. You have to make sure you have skin in the game. Can you explain to me, first of all, one, why we both hate that expression so much, and two, what it means to always be on the hook for things when you're getting money from banks and private lenders?
So typically when you are applying for a loan or you're trying to get money from the bank, you need to put some type of equity position in. So when you buy a house, you have to have your down payment, or if you're buying a business, perhaps you have some equity, some bottom line net profit within your company that can be used as equity, like a down payment for a business. So there's different ways to show this to the bank, but the bank and bankers say this all the time: skin in the game. What's your skin in the game? And the reason I hate this so much, and why I believe you hate it so much,
yeah, I do,
is because my skin in the game is me working and me investing time and me being at that fucking business 7 days a week to make it work. So if that's not fucking skin in the game, I don't know what is. So hence, I hate the expression, because all in all the time, I say it. That's one of my sayings. I'm all in all the time. And it's like, I'm up, I'm at work, I'm working, I'm constantly working, I'm answering my phone. We're doing all this different stuff. I'm all in. I'm already all in. So don't fucking ask me for skin in the game.
No, that does speak to a lot of us, because it is one of those expressions that I always cringe every time I've heard, like, you know, a mortgage rep or a, oh, I want to make sure you have skin in the game. Because you're right, we are all in. So for this young person, this young man that asked the question, what would, like, you used, you know, a couple government funded organizations, and I get that, and I agree, it's great. If you were, you know, new to the business realm, would you not waste, or sorry, I would say that, would you use some of your time to go after, like, kind of like A lenders, like the big banks, or would you stick to private? Would you stick to grants? Like, what's your experience with that kind of thing? Because I know you know the answer. Like, well, let's share with us the answer that you have for that, as far as, you know, lending with the major banks in Canada.
You can. There's always, I mean, the bank's always going to look at the opportunity. Typically, they like to see 2 years financials for anything that they touch, typically. And I don't want to speak for the banks, because I know where that gets me. Yeah. But typically they want to see a little bit of, you know, operational time and different. They want to see some financials, things that are showing them that the business is going this way and not this way. So it's not a waste of your time. And I wouldn't say skip that, because connections, I've met some people in the bank and somebody who I won't mention their name, but they're completely amazing. You know, they work for one of the big five. And I met him, you know, the same way. Fortunately, we did a deal, but I never would have met him if it wasn't for another circumstance. Mm-hmm. So I will never say don't do something, but the chances of getting an A lender to fund a startup are less likely than any of the other methods that I've previously mentioned.
And I think it's also worth to note, and you introduced that person to me as well. And, you know, we haven't yet do a deal, but we've made that connection, and we will in the future. And I think it's also important to note too, Nick, is that, and great human being. I think it's also important to note that it's not necessarily, doesn't mean you have to not go back to the A lender, like after you have 2 or 3 years of financials with your small business. So in this young man particular question, when he's talking about, you know, getting people to lend you money, like, you know, going to a different lender and using all the opportunities that you said, and then circling back 2 or 3 years later, might be something in the cards down the road, right?
Absolutely. For sure it is. And I mean, that's something that, you know, you're not tied to any of these things. And there's short-term solution for long-term gain. So your short-term solution can be a private lender. And yes, you're going to pay more money. Of course you will, because it's a less stringent approach to, you know, being approved. So why wouldn't they? The risk is higher. They're going to charge more money. Anyone can understand that. But it doesn't mean you need to sign up for this for the next 25 years. Do it for a year, do it for 2 years, and then roll it out. Once you have 2 years financials, roll it out and be talking to these people and making these connections all the time. So one thing I said when I started this spiel was, when you're starting up or when you're starting a new business, you don't have the connections or the relationships yet. Right. So you're going to go to the BDCs, you're going to go to the CFDCs, et cetera, et cetera, et cetera. But this whole time when, okay, now you get your short-term money and you're working and you're building your credit and your business credit, and you're making sales and you're going on an upward trend. These are the times when you create these relationships that are going to roll you out of that high interest debt in your 1 or 2 years or 3 years or whatever.
Yeah, and I think it's also important to note that, you know, the importance of building that relationship, right? Just because a bank, you know, they have their mandate and they have to say no, doesn't mean that person that you're dealing with is the enemy, right? Like, continue to cultivate that so that you can circle back, like you just said, 2 or 3 years later, and you have somebody in your corner in the bank. Sometimes the
Absolutely.
numbers, yeah.
I mean, it's like, and when we went up, like I went off on banks before, that's the approach was you need to be true to you and what you want and your goals and your dreams. Be true to that. I'm not saying treat people like garbage, but I'm saying you need to take the steps that are going to improve and optimize your life. And if you don't want to do that, and you don't want to try a million different options, then you're never going to succeed in this circle we call entrepreneurship. It's not going to happen. So to your point, exactly what you said, relationships with all of these people are key. So don't burn any bridges, but I'm certainly not going to sugarcoat an approach ever. And if that hurts people's feelings, I'm not, so be it.
Yeah. No, I mean, I think anybody that knows you and knows the show knows that we're here from the angle of just trying to help, right? And sometimes the hard truths are the ones that hit the most. So I want to continue on this, Nick, because I know that we've got a lot of questions to get through. So, and like I said to our listeners here, I'm just going to read these verbatim, and Nick's gonna unleash on it. So when I say unleash, I mean that wholeheartedly. So here we go. So great question for the first one. The next one: got over my head in credit card debt. How do I get out?
That's the whole question.
That's it. Got over my head in credit card debt. How do I get out? Question mark. That's the whole question.
Okay, so it's common. It happens.
Sure it does.
My wheelhouse is, I like to think it's money and finance. We talk a lot about about business, but obviously I am a person and I deal with these issues as well. And I also, when I was younger, I was in huge debt and went in even more debt to go into business. So to answer the question, my approach is always start with the highest interest. Okay? Start with the debt, the credit card, the line of credit, whatever it is, with the highest interest. You want to get that out of the way. Pay that off first. If there's a couple, focus on one. Get one paid off. Then work on another one. And, there's this thing called credit utilization. And basically what credit utilization is when your credit score is being derived, they want to see how you're using your credit. So not only do they look at, are you making your regular payments? Are you, have you missed any payments? Are you, have you closed any accounts, etc. They also look at credit utilization. And that is something that if it exceeds, I believe, and don't quote me, keyboard warriors, if it exceeds 60% of the value or the available credit, then it starts to be a negative towards your credit score. So if you have a $10,000 balance and your current credit or the amount charged against that card is higher than $6,000, it becomes a negative impact on your credit card or on your credit report. So start with the highest interest ones, get them out of the way. Stop using credit. Stop right away because you've identified a problem. So that needs to stop. You need to write all your expenses down, and you really need to look at, okay, how much am I bringing in versus how much is going out? If you don't have enough to pay those bills, then you got to cut your expenses. Some things can't be cut, some things can. This is where you sacrifice now for the future. So cut where you can, get your money coming in greater than money going out. Cut as much as you can, take that difference, pay your highest interest debt, start knocking them down, get them all below 60%. Your credit will slowly start to repair. Bob's your uncle. It seems easy. It is that easy. But it's a sacrifice. It's a commitment. It's like, I use this example all the time, a fitness routine, because it's not going to happen overnight. It takes a long time. It takes commitment. It takes stick-to-itiveness. It takes making a plan and executing a plan. And if you don't, then you're fucked.
What if I say to you, okay, I want to circle that in, because one of the questions that goes like, how do I attack my debt? So you've kind of killed two birds with one stone here, for lack of a better term. What is so what I want to say to you then is what does it mean to go without then? Because you hear it all the time, Nick, and I know that you do as well, and I see it is people like, oh, I want to get out of my credit card debt, or how do I attack debt? But they have a $700 a month credit card payment, or they have a car payment, like a truck payment, things like that, like a boat payment or a Sea-Doo payment and all this kind of stuff. So like, how do you go without? Like, how do you make that sacrifice? I think it's a really great idea. Like what you said is write down what you have coming in and write down all the debt you have coming out, and then use that to pay, like what you try to get ahead of it, and then use that money to pay off the highest interest. But like, how do you cut down on going without and not buying things on credit and interest and things like that?
Discipline. Just like business, discipline. You have to, what the goal is, so you need to go after it. Stop eating out. Stop drinking. Stop smoking. Stop buying clothes. Stop going for wings with the guys. That's eating out. Cut down on your grocery bill.
Skip the hockey pool. Skip the football pool.
Yeah.
Right? Exactly.
Cancel fucking DoorDash. Yeah, it's huge. You see people fucking piss money away. DoorDash, Uber Eats, because you don't even fucking see it leave. People just sit there, order up a fucking pizza, comes to the door, and no one's none the wiser. Till you look at your bank statement and it's fucking $6,000 in DoorDash at the end of the year.
Yeah. Well, and it's what about the streaming platforms as well? How many do you need?
Mm-hmm. Same deal. Mm-hmm. Same thing.
So basically what you're saying is just, like cut the stuff out of your life that you don't need, and you don't, these things are not what making you happy, because we all know that that's an intrinsic, or we've talked about that before. Maybe we'll talk about it in later shows, but because that kind of stuff comes from, working on yourself. And so the reality of it is just what you said, right? Cut all that stuff out, get rid of that nonsense, skip wings and beers with the boys, the girls, and the people, and go without for a little bit, and you'll be happy that you did. Because like you said, if you got a plan, you'll be happier in yourself for reaching that goal.
And quit trying to be a fucking big wheel. That's the other thing, because Joe Neighbor got a fucking BMW M5, then you need to go get, an Audi A8.
Yeah.
Like, who gives a rat's ass? Focus on you. The competition's with you. It's not with your neighbor. It's not with anybody else. You want to be a better you every day.
I like that. Yeah. No, that's great.
Subscriptions will fucking nickel and dime you too.
What's say it again?
Subscriptions. They'll nickel and dime you.
Yeah, no, these are all great. And so the reason why I asked these questions, Nick, is because I knew that you'd get to that point of just like, these are things that we can cut out right now. So the person that asked that question, how do I, I get into my head with credit card debt and debt in general, these are things that you can cut out of your life right now and go without for, 4 months, 5 months, 6 months. And honestly, if you find yourself asking the question, well, I can't go without that, then how bad do you want to get out of the debt?
Yeah.
Right? There's some things you can't go without, right? You need to eat. You need to, pay the rent or the mortgage, whatever. You need to keep the bills, keep the lights on. But there are some things you need to go, you can go without. And it comes down to how bad do you really want it to be out of it?
You can really go without a lot. If you truly want to pay shit off, you'd be surprised.
Yeah.
You'd be fucking surprised. And we're in Canada. Like, going without in Canada is like living like a fucking king in some countries.
Yeah.
So, I don't feel bad for anybody who's got to, pare it back a little bit, or, try and live within their means, because we live in the best country in the world.
100%. And it's funny. Like I don't know about you, and you can speak on your terms, but you and I are pretty good friends and known each other for a while. Like I actually have more admiration for the people who are scaling it back, being like, you know what, it's not in the budget this week. Yeah, to go for dinner. It's not, we can maybe schedule it next month when the new budget starts, and maybe in a different episode, we can talk about budgeting and stuff like that and household budgets and stuff. But like, I have more admiration for people who are that self-aware about what they can't spend than those that are like, sweating it out at the end of the dinner because they're not really sure if the credit card's going to go through just to fit in.
Exactly. No, you're right. And you need to be self-aware and you need to be honest with yourself. You need to be honest with yourself all the time. And then this goes outside of money and outside of business. But if you're not honest with yourself and your goals and what you can do and what you're willing to give up and all this other stuff that makes you who you are, if you're not honest and you're lying to yourself, you will set yourself up for a massive failure.
Absolutely. Yeah. It's funny. And speaking to that, I remember, being at a dinner and a gentleman, instead of being honest with everybody, being like, I can't afford this, went quietly to another person to pay for the dinner and let them pay for it. And then was able to kind of save face. You know what I mean? And it was because of, at the end of the day, it was because of the ego type thing. It was more of that. And the person that bought the dinner was kind and wanted to do it and was, didn't want any of the credit and wanted him to, save face. But it's interesting to me because when I heard that story, I thought to myself, not one person would have looked at him different. Maybe they would have been more looked with a little bit more admiration if he would have got up and be like, listen, like I am just so stretched. I can't afford to buy this dinner for everybody. Like instead of having it $800 on one person's bill, split up through the entire table, is $35, $40 each. Everyone would have been more than happy. I know would have been more than happy to pay. But because they were trying to keep that kind of big wheel mentality or that, I paid for this dinner, they actually went to someone quietly, let that person pay, who didn't want any credit, didn't take any of it, and just kind of went on the day and pretend nothing happened so that he could walk around being like, well, I paid for everybody's dinner type thing. And everybody was thanking him type thing. And I thanking him. And he was like, oh yeah, no problem. And he didn't pay for anything, but he didn't have, the sense to be like, I can't afford it because it's an ego play, right? And so often we let our ego, and that's how, it evolves. That's not the reason why everybody gets under credit card debt. That's not the only reason, but it does count for some of it.
And it goes hand in hand with asking stupid questions, right? Once you shed that mentality and shed that ego and ask the right questions in business, that's when you really start to notice you learn the right things.
Yep.
And you learn things that are going to help you.
100%. On to the next one, Nick, just because of we can go on to this. I love this. This is great. This is great dialogue. And I think this is something that we should get our listeners to ask, more questions. We'll put some more questions out in the coming months here. And maybe another show in a couple of weeks, we'll put it out to the audience. Because this is the stuff that they want to hear, right? They want to learn about. And I'm really happy that they had the courage to write into us. How do I know if I have good or bad credit?
Okay. Good question. And it's something you need to know. So the big five in Canada have, I think all of them, I'm not 100% sure, but I know I know RBC does. I think TD does. I think. And I believe Scotia does. For sure. Check My Credit. And that's right in their online platforms. So basically you sign into your online banking like you were going to pay a bill or whatever. And there's in the drop-down menu, you can pick Check My Credit Score. So they've partnered up with like TransUnion or Equifax or one of the credit checking places. And you can dial in and check your credit score. And it's pretty close. I know sometimes it's not bang on, but it'll certainly show you what you owe, what minimum payments are there. And it'll show you your number score that kind of reflects all the different factors that play into one's credit. And you need to know that. You can play around. There's like little features on there that you can, what if I take this debt out? What if I up this line of credit? And if you really play around with it, you can understand what affects your credit and how you can make it better just by taking 10 minutes and screwing around with that feature. So that's huge. If you don't know your credit score, go online, go to your online banking, see if it's got that, check it. Okay. This is in Canada too, people. So I'm speaking for the big 5 Canadian banks. There's websites. So you can type into Google how to check my credit score. Some of them you have to pay for. That's okay though. Pay for it. It's not super expensive. They want a recurring fee to like monitor your credit. I don't think that's necessary because you should check it yourself every once in a while anyway. So just pay the fee again. Don't get hooked into a subscription model, but keep an eye on your credit, know where it is. And then when you want to go to the bank and you want to borrow, you know where you stand.
I'm going to go one step further for this person's question, which is great. Like you said, it's a great question. Why is it so important to know?
Because you need to know if you can borrow money. You need to know where you stand with the banks. You need to know if you are going to be able to qualify for that mortgage that you want to get with your boyfriend or husband or significant other or partner, whatever. You want to know if you can get a car loan because your old shitty van broke down. You want to know that long before the van breaks down, not the morning of when you're going to start it and it's minus 30 degrees out and the kids got to get to school and, you've got places to be. You need to know these things because it sets you up. It sets you up for success. And this reminds me of this. It's a story. Okay. It's like an anecdote. And it goes something like this. Okay. So there was a lady. Okay. She always had bad things happen to her constantly. She had the worst luck. Okay. So she would, she just could never catch a break. So one morning she gets up, she's rushing around to get to work. She's got her coffee. She makes it. She's got it in her hand. She's got her briefcase and she's like going out the door, shutting it with her ass. Slips on the ice, spills her coffee on her. Her briefcase goes flying, laptop smashed. Another bad thing has happened to this woman. What bad luck? Or what if this? What if she, the night before, woke up a little bit early and put some salt down on the step? That looks after the ice issue. She woke up a little early, drank her coffee before she left, or took the time to put it in a mug with a lid on it. Okay? She wouldn't have spilled coffee on herself. She certainly wouldn't have been rushing out the door, and she probably wouldn't have smashed her laptop. So is it outside things that are affecting this lady, or is it things that she controls that are delivering that bad luck to her? So tying that in with what I just said, you know where you stand with the banks. You know where your credit is. So when something does come up, you know exactly how to attack it.
That's a great anecdote. I love that. What, and just before we go on to the next question, Nick, what do you think would be a good number for them to see on their credit score?
720. Yeah,
720,
700 is okay for sure. High sixes.
Okay.
Those aren't stellar. Like, I'm not saying that's amazing. Like, if you have 800 plus, that's really good. But if you're like me, and you're working away and you've got debt and you're trying to grow your empire and your business or whatever you're doing, and you've got a mortgage and you've got kids and all these different bills, if you can hover around 700, high sixes, you're certainly in the wheelhouse. When you get down into the fives, the low fives, that things start to get tough.
Yep, got some work to do. When should I use my credit cards? When should I use my credit cards?
Good question. If you can afford it, use them all the time. If you can't afford it, never use them.
Can you explain?
If you can pay them off the next day, go ahead. Use the credit card to get points, to build your credit. Like there's crazy, awesome incentive programs on these credit cards where you can get points. One of the ones that I used to do was I would take my points and I would roll them into a tax-free savings account. So I could actually take my points from things that I had spent money on and then roll them in as a cash value into a tax-free savings account. So this was like free money going into my savings accounts, my tax-free savings account, or a registered savings plan, I think one RRSP or TFSA, and you didn't pay for it. The only time you pay is when interest is building up, and obviously that's how they make their money.
Great. Love that. How do I attack? Okay, we already did how do I attack my debt? When should I use my credit cards? Should I claim bank? Okay, there's no context to this question. So I'm just going to give it out to you, and it'd be interesting to hear your approach to this. Should I claim bankruptcy?
That's the question.
That's it. Full stop.
Okay. So I'm going to assume that maybe they're in a shitty financial situation, perhaps.
There's no context to the question. So let's just assume that. Let's just assume that they, there's no, they're in a tough financial situation, and, maybe give some options and kind of go from there.
I would say that's a last resort. And I'm not shitting on bankruptcy because I know tons of people who have done it and bounced back. Most people who I know, and I know a lot of relentless motherfuckers who have had to do that, have bounced back. So I'm not saying it's bad or you shouldn't do it if it's necessary, but definitely use it as a last resort. So, rewinding to the beginning of our conversation when we were talking about how to attack debt, that's what you want to look at all those options first. You want to explore your scenario, and you really want to see if you can get this done another way, because the bankruptcy will protect you. But it's not going to solve your spending habits. Right? So it's not going to, if you're shitty with money when you're poor, you'll be shitty with money when you're rich. So that's why when people win the lottery, it's fucking gone, because they sucked with money to begin with. So, or even like pro athletes, for example, you see this all the time, because a lot of them have come from very little and they were just these crazy, crazy good athletes, amazing people. But no one ever taught them how to deal with money because they never had to, and they never had any. So once they get this big windfall of money, and I understand there's programs now like with the NFL where they try to teach, finances to some of the guys and gals, but claiming bankruptcy is not, it's going to solve the short term. It's not going to solve your habits. It's not going to change your habits. So if you can change your habits and not claim bankruptcy and really turn your situation around, I think that's kind of a twofold win.
Yeah.
That's my answer.
So what about like debt consolidation, things like that? Because there are programs, right, that will help you. Can you maybe talk a little bit about that, Nick?
Yeah, there's the banks will offer like a consolidation loan. There's rules around it, I think, where you can't open any new credit, or you can't the payments, it's a set amount, and it is a negative. It does have a negative impact on your credit. but certainly, it's an option as well. So they'll take all your credit card or all your credit that you owe, all your debt that you owe. They'll put it all together in a loan, one payment, and then you pay that loan off over the course of 5 or 7 years or whatever the term may be. And it's a set interest rate, and that's another option for sure.
Sure. Yeah. No, you've given some very viable options. So hopefully that, I think that answered the question as well. This is a good, this is a really good question. They're all good questions, by the way. So another shout out to our listeners, eh? First of all, we're glad that you're listening. Thank you. If you're listening, tell a friend, right? Tell 2, tell 10. Okay. The next one. Let me just see. How do I know if it's good or bad debt? How do I know if it's good debt or bad debt?
This is an important question.
Mm-hmm.
This is a very important question. Good debt versus bad debt. Super fucking important. Listen up, anyone who wants to go into business, especially. Good debt. Buying a house. Bad debt. Spending $800 to impress your friends at a fucking dinner that no one gives a fuck about. Good debt. A business loan that's going to allow you to grow to the next level of business, the next level of success within that business. It's going to allow you to buy equipment needed to grow. That's good debt. Bad debt. Buying a fucking really, really expensive car when you can't afford it, when you could actually just buy something that's more practical and it'll do the same thing. Good debt. Taking money every month and putting it into an investment plan. Bad debt. Taking money every month and spending it on DoorDash, on your credit card. So with the investments, there's different things you can do, like borrowing in order to invest. So they're called margin accounts. Sometimes you can actually get an investment loan. You can get like RRSP top-up loans, shit like that. That's good debt. But using your credit card all the time for things that aren't going to realize a gain or show you value, that's not good. Can you buy those things? Sure you fucking can. Sure you can do the DoorDash and the $800 big dick move. Sure. If you've got the money to do it, do it. But if you can't the next day pay your fucking credit card off, then don't do it. The only time that I am going to say max your credit cards out is when you're starting a business and you have no money and no one to turn to and the banks tell you to go fuck yourself and you have personal credit available and you believe in your idea and everyone else doesn't, and you know it's going to work, that is when you can take on that debt.
Yeah, no, that's great advice there. Speak to this. Just because you can afford the car payments doesn't mean you can afford the car.
Yeah. 100%. That's like, there's a formula that I have where it's a certain percentage of your income should be allocated towards different things. And, maybe I'll share that in the future, but the more you make, the more you can afford. But different things should never exceed a percentage of that. Like, you need to be putting a huge portion for your retirement, or a large portion, a huge portion of your income is what I'm saying, towards your retirement. If you're taking that $400 and coupling it with your $400 monthly car payment to make $800, and then you're getting a nicer car and then not doing the investment, that is exactly what you are speaking on.
Yeah. Makes sense. Yeah, totally. Love it. That's great insight. So speaking with the car, the next question came in. We got 2 left. I have a car payment. How do I know how much debt I can accumulate?
they have a car payment and they won't know how much more debt
they can accumulate. Yeah.
they need to understand their credit score, number one.
Yeah.
So just find out where that is. And I'm guessing they probably want to buy a house. So I'm going to make a few assumptions. They have a car payment and they want to buy a house, because I'm only going to speak on good debt for this question. If you want to use your credit card, you want to know how much debt you can put on that, and you have a car payment, then you should lock yourself in your house, cut up your credit card, and never leave. Never drive that car anywhere. Return it to the dealership immediately. So where the hell was I going now?
Well, just that, yeah. So you're assuming, we're just going to make some assurance. We're just going to assume a few things here. That they have a credit card, or they have a car payment. They're guessing they want. You're guessing they want to take on a little bit more debt to try to get a house, things like that. Not a little bit, a lot more debt.
Credit. Understand your credit. Understand your credit score. That's fucking huge. That is so important. Get onto your online banking platform. Check it. If you can't do that, go to one of these websites. Pay the $20, $30, $40. Understand your credit score. Can you afford it? I'm not asking anybody else if you can afford it. I'm asking you. Can you afford to take on this other payment? This mortgage? I don't give a shit about the debt service ratio, and the bank says you can do it. Can you afford it? If the answer is yes, then we go to the next step, which is approaching the bank. They have debt service ratios, total debt service, gross debt service. They look at how much this payment is going to be as an average against your total income. And you need to obviously meet the criteria to be approved for the loan. So understand your credit score, understand what your payments are, and be honest and realistic with yourself if you can actually afford it. Can I afford it? And if the answer is yes, then talk to somebody. Talk to a mortgage broker if it's a house. Mortgage brokers can also do different types of line of credits and HELOCs and shit like that too. So, they're more than just getting a mortgage on a house. But yeah, you just got to know where you're at. And so many fucking people are afraid to check. I don't want to check my credit score because it's shit. I don't want to know. I want to know. I want to know exactly where I stand. It's like going into a fight and turning around backwards. What's going to happen? You're going to get pummeled and punched in the back of the head. But if you're got your eyes on it and you know what's coming, and you can anticipate things and know what to expect, you know where to go and you know how to move in order to navigate the next step.
Yeah, no, that's a good analogy. I mean, and that's great advice. It's like going into a third or fourth quarter of a football game or basketball game or a third period of a hockey game, right? You always want to know the score. You got to know the score. What the same applies for your business. Yeah. Okay, last question here, and this is right in your wheelhouse, Nick. So I think this is going to hopefully set this person's mind at ease. It's a great question, especially in today's market. I recently bought a house in this crazy market. I think me and my husband overpaid. Is there any advice you can offer?
That's common. Like, that's a common thing that's happening. It's common, and it's like it's so common that it happens more, because when the banks lend money, you need to qualify, obviously, but there's one of the conditions is always like the bank needs to have the property appraised. So they'll use like a direct comparison method when it's like if you're going to live in it. They'll use a direct comparison over like an income approach where they will look at other houses that sell. So the more houses that sell in this stupid market, the more these appraisals come back and say they're worth that, and the more the banks will lend against these fucking properties. People sell, they realize all this money and think they're fucking rich, because their house sold for $100,000 over asking. They take that money, put it on a down payment on a more expensive house, and then they've got this big payment. It happens, you know, we've all been in a position where it's uncomfortable. Again, go back to what you can cut out. Okay, go back to how you can pare down your expenses. This is huge. This is huge in business too. But so what can you cut out? Where can you save? Where can you really put money to the side? Open a separate account. Typically, you can open like a second checking account on your online banking platform where it's free. So open another account, and if your mortgage payment's $2,200 a month, put away like every 7 days, 1/4 of that. So just take it and put it there, and it can't be touched. And then you know your mortgage is covered, even though it's a lot. And then you know what you can spend. You know the other money you have. And then you know that money can't be touched. You know your mortgage is there. Now, if it's a little bit worse, okay, if it's a little bit worse and perhaps maybe you were qualified for it, and then at the same time you bought a BMW and your sister got a divorce and needed $20,000. And so you put it on your credit card. So now you are buried. If that is the case and you can't keep up with the payments, go talk to the bank. Because there's different types of things where sometimes they'll let you skip a payment. Sometimes they'll let you restructure loans. I saw a lot of stuff where loans could be restructured during COVID, and sometimes they'll go easy on you. They'll let you skip a few payments. They'll add it on to the back end. The bank's never going to lose money. Don't get me wrong, people. The bank is never going to lose money. They're a for-profit corporation. They're never going to lose, but they're there to help. They don't want to take your house. Trust me, it's of no benefit for the bank to take your house. Okay? Because then they got to sell it and fuck around with it. And they'll work with you. So reach out to your banker or whoever you got the mortgage from. Ask them questions. To ask about the credit card that you got the $20,000 on. The car is a tough one because you'll get financed for 100% of it. And typically when you drive it off the lot, it's worth significantly less than when you purchased it. Sure. So that one's tough. That's a pill you got to swallow oftentimes. But, the house, the restructuring of the loans, trying to put yourself in a better position.
I think it's also important to note too, right? That's good debt. You mentioned that earlier in the show. So for this person that, that asked that them and their husband decided that they were going to buy this house and they think they overpaid, it's also good debt. Like over time, if you amortize your mortgage over, 20, 25 to 30 years, whatever you amortize your mortgage over, that house is going to be worth something in the future. So whatever you paid for it now, understand that, 20 years from now or 15 years from now, you're going to look back and be like, wow, that was a steal. Maybe not a steal, but that was a bargain considering where it's trending, not necessarily in this market, but where houses and real estate will appreciate over time, right?
Exactly. And I mean, you're paying it off too, right? So you owe less against it. So even if it appreciates $0, even if it depreciates 100,000 in 25 years, which would be fucking crazy, even if it did that, well, in 25 years, you got an asset worth $700,000. Yes, you paid $800,000, but you also borrowed 20% or 80% of the money to do it.
Yeah.
So, these are the things you got to look at, and I'm glad you mentioned that. It is good debt, and that's the important piece of that puzzle. You're in the situation now, so you got to figure out how to navigate it. But understand that there's programs out there to help. And like I said, the bank doesn't want your house. They'll work with you a little bit they'll always get their money, but maybe they'll defer it or they'll work with you.
Yeah. And you got an asset, just like you said, Nick. Like whether that asset, if it does depreciate over 15, 25 years from now, whatever it is, you paid it off or you're paying it off but you still got an asset that's worth, a a lot of money. It's more than your mortgage because you've already paid 20%. We don't know your situation, but we're guessing that's usually the situation. So that's the last question. This has been a really far-reaching and deep dive into mainly credit and what people are going through. As we wrap up here, Nick, do you have any parting shots?
Credit's your friend. Okay, credit is your friend. You just need to know how to handle it. Okay, so you're gonna use credit. It's inevitable, especially in business, especially if you have big dreams. You're gonna need to use credit. Unless you have rich parents or a big inheritance or somebody who's gonna give you a shitload of money, okay, then you're gonna need the banks. You're gonna need credit. So use it, be smart about it, understand it, learn about it, people. Learn about credit. Learn about your credit. Read. It's 2021, for God's sake. Go on the internet. Do some research. Learn about credit. What it can do for you. Don't overextend yourself, but you're going to overextend yourself a lot more than somebody who's, really conservative will tell you, well, you shouldn't do that. I wouldn't do that. That's a big risk. You know how many people told me that? If I listened to everybody who told me to not do something, if I listened to every single person who told me to not do something getting into business, I would be in the same place I was in 12 fucking years ago. It's brutal. But only I could see that. And only you guys who are listening can see that about yourselves. Don't expect anyone to give a fuck about your life or try and rah and help and do all this stuff. Yes, there's people along the way who are going to help, but ultimately nobody cares about you and what you do. Your parents, your siblings, yeah, they care. But the only person who's going to propel you in life is yourself. So you need to look out for number one so that you can look out for everybody else in your family, your kids, your parents, your siblings if you need to. You need to look out for you so you can look out for them. And that's what I try and do. And I'm not saying that anybody around me needs looking after, but if they ever came to me, I sure as fuck would be there. So I need to put myself in a good position so that I'm able to help if somebody needs me. And I did that by creating a mindset of nobody is here to help me. And they sure as fuck weren't. We will talk in the future about actually other business guys trying to fuck me for different things like land, other businesses, for money, things that you would expect these white collar business guys and corporate fucking dudes would never do. But they fucking do. It gets pretty greasy out there. Line yourself with the right people. Okay? Understand your credit and fucking do it. Go out there, make your mom proud, make yourself proud, get to work.
That's Nick Gilmour. I'm Nick Foley. This is Cash Rules. We'll see you next week.